Would you like to know how to get out of debt within 9 years or less without spending any extra money? If so, the purpose of this webinar is to introduce you to a system where 90% of the people who have done a debt-free life analysis are able to reduce their time in debt by 11 years, 19 years, or even more, and cut tens of thousands of interest without paying any extra money than they were currently. We'll show you a case study later where we're able to save someone $500,000 over their lifetime. Hi, this is Mike Wright with Wright Insurance Advisors and ForesightLifeInsurance.com. I'm going to go to my screen and show you the presentation, the information. Since this is being recorded, we will answer questions at the end. The federal programs are hurting. It's projected that by 2035, there will be only enough funding to pay for 75% of the benefits that all retirees will need. And they will also need to take a 25% reduction in benefits at the current rate. We have time to fix that. Medicare, it's projected that in 2026, the Medicare program will be insolvent. That's a little scarier. So what do you think about future tax rates? Will they be lower, go higher, or stay the same? Somewhat of a rhetorical question. That is the problem with the federal debt. Now let's look at what's occurring at the consumer level. Our average US household income in 2022 was $105,000. The median household income was almost $75,000. So the amount we make isn't really the problem. We make quite a bit of money on average, but we spend a lot. A majority, nearly 2/3 of Americans say they've been living paycheck to paycheck since 2020. This is a CNBC study from 2020 where 63% of Americans were living paycheck to paycheck. 1/3 opened a new credit card in 2020. We updated this up at the top. You can see here, this is from 2024, another CNBC-led study. 65% say they live paycheck to paycheck. So as a firm, as a professional, we feel we have a duty and an obligation, responsibility to help these families. So the question is, do you know how much you spent last month? What percentage of Americans do you think know how much they spent last month? You probably know because you're on this webinar. But 69% of Americans said they didn't know how much money they spent in the previous months. And for the younger generations, it's even more. So why do so many people fail at financial planning? To achieve financial freedom, we need to have a plan and we need expert guidance on how to get there. 75% of Americans have no financial plan in place. Part of that's our education. I'm a previous certified financial planner. And my feeling is how the financial planning professionals, how they have to run their businesses. They work with wealthy people or highly affluent people, so it's hard for them to run businesses on the middle class. So what if I could show you how to get out of debt and build wealth without spending any additional money? What would your life be like if you were able to accomplish this? If your mortgage and other debts were paid off, would you be able to retire in comfort? How do we do this? This is not debt consolidation. It's not a get-rich-quick scheme. It's not multi-level marketing. It's not a sales pitch. There are different programs out there to help you get out of debt. You might have heard the debt snowball. You pay off your debts in order of the smallest balance to the largest. This is, probably more of a psychological way, make you feel good, make you feel like you're accomplishing things, which, it's not terrible. Um, but it's not always the best way to, pay down your debts. The debt avalanche is you pay off your debts in the order of the highest interest rate to the lowest. That's somewhat in inverse, but if we're running this program, which most, are the basis of debt-free life is a form of the debt avalanche with some customization. Because, we look at if you have a low interest rate with introductory offers and things like that, or if it's the amortization schedule is longer and the payments are less, it may make sense to pay off shorter term, higher interest debt. So as you can see, if you have an extra $100, you can either use it towards the snowball or to the avalanche. And generally we prefer the avalanche. Debt-free life also uses infinite banking. You basically bypass the banks and you pay yourself first before you pay your bills. And that's how this whole program is worked on paying yourself first, you make interest off your money, and then you pay the creditors. What is an amortization schedule? It's basically, the principal and interest and the whole debt schedule to pay off your debt. For many credit cards, no one knows what their amortization schedule is, but we can break it down for you in our program. So basically the program is just taking inefficient dollars and reallocating those. So, you have credit card, medical dental payment, savings, 401ks, things like that. And at the end of the month, in this case, they have $775 that they're either paying for extra debt or they're paying towards 401k and savings. They have $166,000 in debt, and they're making $1,700 in payments. The case study that we're going to review first is Renee and Anthony. As you can see, their monthly income, they make $3,900 and $3,100. I believe this was after tax. Their desired retirement income is $5,000 each. They do not have a current plan. They are contributing to retirement savings. They have 3 children. So their current concerns and things they need to plan for is eliminating debt, controlling their spending, saving for retirement. They need some wills and trusts, and they need to consider their children's education and to maximize their savings. Right now, they have a savings account and they have a 401k with about $36,500 in it. Their outstanding debts, they have $180,000. Anywhere from 18% to 4.5. Well, there's a 0 because that's a medical financing company. And as you can tell, this case study is from probably a couple of years ago, and they're currently paying these down. So the interest paid over time is almost $200,000, and they'll be in debt for 30 years. Most of that's their mortgage. What's the real cost of interest? Why pay off a 5% interest rate? So let's look at the real cost. In year 1, you're paying 78% of your payment is going to pay off interest. So over 30 years, $280,000 is going just for interest. Year 10, 65% of your payment's going to interest. Year 20, 42%. And then by year 35% is going towards interest. So the current retirement plan, they have $36,500. They're making $300 monthly contributions. They're averaging about 5% return on their money. They're in a 25% income tax bracket. So the amount that they are projected to have at the end of 30 years is almost 409,000, and that'd be 307,000 if you consider after tax. So we did an analysis based on the information they provide to us. If they follow our program without spending any extra money, they'd be debt-free in 7.8 years. So they could even they'd have their house. All they would have to worry about is insurance and property taxes. If someone loses a job, you don't have to worry about paying your mortgage. So they'd save $122,000 in interest. They can increase retirement savings by $2,177 a month, and they'd be able to save over $1 million in 30 years. So the current plan, you'd have $306,000 in retirement savings, which, safely probably take out 4% a year. So if you do the math, I believe that's like $12,000 a year, plus your Social Security. Not a great, I don't think it's going to get them to their $5,000 goal. If you follow our debt-free life program, so we pay down your debt, and then we take that money and we supercharge your retirement contributions, you'd have $1 million in tax favored savings for retirement. So basically, depending on how you invest it, if you use the debt-free life program, you could take out 4% a year, and out of $1 million, that's $40,000 a year, and you don't pay taxes on it. So that's pretty close. After tax, that should get them to what they think they need to retire on comfortably. And again, you save $122,000 in interest that basically the banks are profiting from. The second case study I'd like to go over is a business owner with business debt, and they also have personal debt. So here's where they are currently. And again, it's a business. He has $2.1 million in debt. Their home has a pretty decent sized mortgage, almost 400,000 left, and there's 13 years left on that. But the big loan is the SBA loan at 10.5%. And they also have a business term loan that's at 14.5%. So that's $1.5 million in debt. I think the term loan's 5 years. The SBA is like they have 20 years left on that. So their current monthly payments are $26,000. So the amount of interest his family's scheduled to pay, if you add consumer and more and then also the business debt, their scheduled interest is $2.1 million. And of course, he has a business, so that's he's leveraging it for a good reason, but still the cost, we can reduce the cost of that. So their payments back to the lenders is $4.3 million over the life of those loans. So the debt elimination plan, we don't have it down to 9 years. I think, if he wants to get it down to 9 years, they can reallocate some more funds they spend to get it down there. But using a whole life policy or debt-free life program, they'll be able to be 100% debt-free in less than 12 years instead of 20 years. And that would be saving them $504,000 in interest. In 20 years, if they use this plan, they'd have $2.9 million in total assets for retirement. And he's in his 30s, so I think he was planning on retiring when he's 65. So if they just do this program, they'd have $6.6 million that they can access, and we can show them how to do that tax-free. So they would never have to worry about money at all. So you can harness the power of life insurance. And again, we have a specific type of policies. We have a certain way of directing your premiums. Like a third of your premium goes to where it's not, getting big commissions. It's not going to a large death benefit. It goes mainly to straight cash for you. But using specific insurance companies with specific policies and allocating a certain way within the policy, we can redirect inefficiently used dollars. Will allow the policy's cash value to grow guaranteed. You can borrow from the policy's cash value with no penalties or tax. And we do that so you're making interest and then you're paying your bills, and that pays off your debt and allows you to achieve your financial goals. So you repay the loans into the policy with your freed up cash flow that you're not paying to the banks. You're able to finance future purchases with tax-free money, and you can leave a legacy with your policy's death benefit. And it's kind of hard to believe, but 90% of the people were able to help. So the next steps is, when would you like to reduce your debt? When would you like to improve your cash flow? When would you like to reduce taxes? If you would like to do that now, give us a call or go to our website and set up an appointment. Because the question is, do you have a plan to get there? No, we're not going to talk anybody in, we're not going to twist your arm or any of that stuff. We're just going to give you a plan, let you review it with your spouse and family, and it's up to you. If you want to keep on the path you're on, or do you want to shorten up the time you're in debt and get your retirement plan in order. So what's next? See how it might work for you. Like we might cut your debt down to 5 years and you're out of debt. Or it might be 12 years, but on average, it's usually less than 9. So, we have a debt-free life financial analysis form and a life spending planner. So, we have those on our website. So you can pick those up off of there, or, give us a call and we'll email them to you or send us an email. So the next steps is basically, we gather information for your financial analysis. We analyze your data. We run reports with our, it's a proprietary software, and we have your numbers. And then we schedule a meeting with you to go over it and see if it makes sense for your situation. And basically you can get the forms at foresighlifeinsurance.com. You can give us a call at 317-584-0133, and we'll answer any questions that you have, and we can send you the forms. We can tell you other case studies, because there's been thousands of people who have gone through this program and saved a lot of interest. Sorry. So it's up to you, but I'd highly recommend that you and us start living a debt-free life. I want to thank you for attending the seminar. I'm going to stop the recording and we'll do questions. This has been Mike Wright with Wright Insurance Advisors and foresighlifeinsurance.com. If you like the video, if you like the presentation, please click like below so that other people will be able to see it. This will help with the YouTube algorithm, and I'll push it up. So when people are Googling debt reduction plans, things like that, this is a very valid program. You don't have to, there's no debt consolidation, where they might wreck your credit and things like that. It's just basically reallocating your funds. If you'd like to learn more about either life insurance or retirement planning, things about planning, click subscribe, because we will have consistent content coming up and it'll notify you when we have new videos. Thank you for watching and have a great day.